You know what I'm going to ask? What trend are you riding? This is the webcast for Trading the Trend. My name is James Boyd. We got Connie Hill with us in the chat. We welcome her and all of you here today. We got with us Rojo. JP is, as he said, in the house. Dom with us, Ricebird, Will, Crispy, GH, Bill R, and many others. Welcome to all. I want you to know if you have some questions, go ahead and ask those questions along the way. I don't mind at all. It doesn't distract from the class. Kind of actually turns it into, like a kind of a discussion. And I always like that. So just real quick, as we're getting started, I want to give us a quick reminder that all of us coaches do post on educational content on X. There's my handle right there. Check that out. Do post some things in educational nature. They're not recommendations. Also post some things as far as humor as well. So Connie does as well. Connie will post her handle there in the chat. Quick reminder that this session is broadcast via YouTube. Our channel on YouTube, Trader Talk Schwab Coaching Webcast. Okay. And so make sure that you actually subscribe to that. It's free. I mean, I hardly watch any TV, if any. If I watch TV, it's on YouTube. Okay. So YouTube is kind of like becoming like TV in a way. Different channels, different topics. And our topic, of course, is really trading that trend. We'll talk about why this is really important over time. Now, when we talk about our examples, some of our examples will be stocks, some will be options. Remember that options carry high level risk, not suitable for all investors. Remember that when we talk about the information, it's done for general informational purposes only. This webcast discusses technical analysis. There's other approaches just as valuable as well, that like fundamentals, intermarket, macro, that could try to help you get a gauge on what's happening besides just looking at the chart. Also understand when we talk about our examples, we will do those in the paperMoney software application. Make sure that you're wearing that out. I'd say for the first 7 years of my investing, I never even heard of paperMoney. Okay. So when most of us that got started in the 90s or earlier, it was all real money. Okay. Never heard of paperMoney. Okay. Yes, that was when dial-up internet was American Online, if you remember that. And we're sending each other faxes. Now, also remember that investing involves risk, okay, including loss of principal. And also remember that our examples we'll talk about, if we bring up, let's say, futures tickers, we're not trading futures. We're looking at the prices and how that might affect an index, a sector, an industry group, and so on. But also remember that when we talk about examples, let's start with some of these futures prices. We'll talk about some of the indexes. And I'd like to do an index example, and then I would really want to kind of break it down into individual names where we focus on past examples. We need to look at 4 or 5 of them, but also put on probably about 4 or 5 as we're trying to reestablish or reset up a portfolio, okay? Many of those trades we had expired last week. So first off, let's go ahead and just look at this list. Now, this list that we see right here, we're just looking at the indexes. And I just want to kind of take a look at kind of what type of trends we have, which one's showing relative strength first off. So when I look at this, and I'm just going to show indexes first, I'm looking at, let's say, obviously the Dow, the Russell, the NASDAQ, and the SPX. And I'm just looking to kind of see what type of trend do we have. Well, the trend in that column with a little asterisk there, we're in trend 4, which means we're kind of forming a level of resistance. 4 on the NASDAQ. We'll show the charts in just a moment. 4 on the Russell, but 3 on the Dow Jones. Now, when you talk about the trend W, trend weekly, well, it's really showing prices above both moving averages. On the weekly charts, not showing an area of resistance yet. Now, the big thing is when we talk about the relative strength, relative to what, we should ask? Well, when we look at the relative strength, we're talking about the relative strength compared to the S&P 500. Well, what ticker are you using for that? Come to the class tomorrow, you find out, okay? But if we said, is there anything that's kind of forming a little bit here, where is anything performing stronger than the S&P? Yeah, the last 2 weeks, the Dow Jones has held up a little stronger in the last 2 weeks. We also see the Russell 2000 getting a little push, and also the NASDAQ. So those three are standing out compared to the S&P 500. The thing we also want to point out is obviously the semiconductors, which has been painted in that green color. Have you mine? Mine did? Okay. We'll talk about those in just a sec. The one I also want to bring up just real quick is the SPX EW, which is the equal weight. A lot of people like to kind of see, for example, more than not going up. I don't know if the spouse really cares. I mean, if you said, well, I made money on NVIDIA or Apple, but there was 20 other stocks in the Dow that went down, I don't think the spouse cares. Do they? Okay, so I'm just going to kind of put a little asterisk on that. But sometimes people like that other things are going up. I'm not sure if that does anything, but sure. Okay, now, if we take a look at this and say SPX, okay, well, the SPX, if you pull this up, let's just start here. We started yesterday with the price closing above the shorter-term moving average. Let's go back to the comment I just made, which is we would like to see, hypothetically, the breadth of the market get more participation so the move to the upside feels better. Okay, feels. Sure, let's go with that. Now, the biggest actually thing is if we get the close above the 10, can the 10 now turn into support? All right, now, you're going to notice that we're kind of sitting right at the midsection. We talked about this, right? A lot of times when we see prices get above the moving average and the price can stay above that, this midsection might become that bounce area. Now, that SPX trying to get the turn, let's look at the EW, the equal weight. That one kind of showing a hammer-like candle if you think we're at support, could be a hanging man if you think we're at resistance. Frankly, you could actually see both, okay? But putting up a little fight, selling off down to really below the 8,200, someone comes back in and says, look, I'll take some. NASDAQ, just real quick. The NASDAQ, we'll show the NVIDIA in just a second. The NASDAQ kind of showing like what the S&P 500 did, falling down intraday to the moving average, getting a little bounce. The SOX, okay, this is where we kind of got some moves back in here. We'll talk about these with individual names. The semiconductors, okay, and again, think about this. The semiconductors went all the way from there, I'm down here, all the way up here, and you didn't have any move from the software or the cloud or anything, okay? That's my point. My point is if one of them's moving, that one's moving. It would be nice if you had more participation, but that's what happened, okay? We saw the other day in basketball, the Spurs, I can't even say his last name, he scored 40 points and had 24 rebounds. They won over the Thunder, okay? The moral of the story is sometimes some of these trends get hot. And if they get hot, they're hot. Okay? Don't worry about so much about who's on the other team. If that one person can carry the team, they can carry the team. Just like we saw the semiconductors carry the NASDAQ. Okay? So I'm saying that because there's been a lot of comments on I'd like to see more participation. It always goes back to the same thing as what is hot and is the investor riding that trend. Okay? Now, the big actually thing is when you look at the Russell 2000, if this is the bears' attack on the trends here, this ain't much of an attack, okay? We've seen less than a 2-week pullback. We've seen 2750 being carved out, maybe another potential double bottom area right at that spot. The weekly charts look like this, 3-year weekly, and it kind of looks like the old resistance was 2700-ish. We fell down to, let's say, 2726. And so you went within 1%, and then just randomly, you just start seeing buying. It's not random, probably, right? People identify old resistance, new support. They might put those buy limit orders 1 or 2% off that level. Someone obviously carried that out. You go back to the Dow Jones itself, which is what we want to really kind of get to. This is the kind of the index. If we kind of said, is there an index that might poke its way higher? It might be the Dow, okay? That Dow, third day in a row I've said this, the longer we stay at the high without falling down, the greater the chance we actually have to potentially burst to the upside. Now, trade number one. Now, tomorrow morning at 9:30 a.m. Eastern, I'm going to teach the class on ETFs. If this was the class on ETFs, we would just talk about a different ticker. I cannot talk about that because this class is not on ETFs. So in the confines of this class, trade number one, I want to go to the DJX. Okay, now Ben Watson teaches the class on index options. Join him. But let's say the investor said, look, I want to buy the group. Now, when you buy first of all, the DJX, is there any underlying shares? No, it's just the price. Okay. So first off, when you take a look at this, again, if this was Friday, we might say, is there a ticker or two that we could trade that has underlying stock? Okay. But if we said, no, there's not, I'm going to use this as an example. And so sometimes people say, James, I want to get exposure to the trend. And one way to get exposure is, let's go buy the shares. Well, now, if I just listen to what I said, there is no underlying shares. Okay. So what we're doing is we're playing a direction, a bullish, bearish, or neutral direction. If we buy a call, we have a right to buy we have a right to buy the what? Okay. There is no right to buy the underlying shares. So if you buy a call, you're really thinking the price is going to go up and the options could appreciate in value. What drives that option price? We know two main things. Number one is price goes up, more intrinsic value. And the other one is volatility that pumps the option price up. Now, if you take a look at the spread on this, and I've already said this, okay? If this was Friday at 9:30, we might look at a different ticker. But if I look at this right here, let's say trade number one, let's say the investor buys a call with an AM expiration, okay? Now, the one thing is the spread is wide. We get it, okay? We said that 3 times, okay? Now what I'm going to do is I'm going to go 825. So if I looked at this just real quick and kind of just showed this, and let's kind of put that right there. I'm going to kind of put this, which call are we doing? The at the money strike. The at the money strike, the 500. Now, if we pay $8.25, the break even at expiration is 508.25. Okay. Now, if we take a look at this, the max profit is infinite. We don't think it's going to be, I mean, I've never seen an infinite gain. It's hypothetical. Okay. And now we see the commission plus any fee. So trade number one is we're not buying an individual stock. We're going to kind of look at the index. Could the index go up? And I think this is where a lot of people miss it. You're always trying to find the perfect stock. We're just trying to get exposure to trend. It could come from the index. It could come from the sector, an industry group, and then stock. Okay? Again, I'll say it again. Do not overlook the index or something that tracks it. Don't overlook the sector. Don't overlook the industry group. I think too many people are probably just trying to find the perfect stock. Sometimes it's just about getting exposure to that trend. Can I get anyone to agree with me? Anyone? Okay. Now, let's put this in the paperMoney account. Okay. Now, if we go back to this, now I'm going to go to the IRA if I can. Go to the trade tab, DJX. There it is. We're looking at the June option that has 27 days left to expiration. That right there, we said the 500, and it moved a little bit on us. That price is going to be right about 820. Now, if we do not set a stop, okay, if I go back into this and say, what's the max loss on a long call? The max loss is, show there, is $820. Okay. And there we actually see that right there in the paperMoney account. Trade number one, we're going to see if the Dow can't go higher. Now, the one other thing I would say to that just really quick is, well, that's trade number one. I'm a long call on the Dow. Tomorrow morning, I'll kind of just follow through on that just a moment as well. Maybe talk about a different ticker or two. The one thing I want to kind of say right here is when we've had a chance to maybe get volatility to go higher, those bears, they have not been able to take it lower. Okay. I bet these bulls are kind of just chuckling a little bit, those bears. Ha ha! That's all you got? That's all you got? That's it? Okay? I bet those bulls are kind of chuckling a little bit. I can just hear them in the background just, okay, just chuckling. Those bears like, next time, I swear it's going to go down. So funny how we get so passionate as far as who's right. Okay, but we'll see over time who's going to win, bulls or bears. Okay. Now the comment says VIX below 17. Yeah. Look, I mean, this kind of goes back to the lines we had drawn, which is let's see if we had that. We kind of said, look, we might just be in a range on the VIX, and so far it's been a range. What do I take away from the VIX kind of staying more range bound? Kind of tells me that trend is probably going to be stickier than we thought. Higher lows or support could be built, and that could just be the plateau for the next potential launching point. Okay. All right. Now, let's actually go back to just real quick, couple other things. We talked about crude oil yesterday. We talked about, could we get that crude oil to slip down? When you look at, let's say, the prices of crude oil from the current month, July, go out in time, you're still talking about 99 in the current month, and then you go out in time, they're at 85. So there's still some shorter term price premium. We found out yesterday that I saw that there was a small company. Now, where can we see this? Okay. We talked about DAL and we talked about UAL. Did anyone actually see that news? Did anyone see that news on DAL? Now, let's see if I can't get not the watch list. Let's pull this up. Switch gadget. I want to pull this up. Live news. That's what I want. Okay. Now, let me put it right there in that. Let me go number one so it matches the chart. And there was some news yesterday that a small company, Berkshire Hathaway, actually, yeah, there it is, took I think a $2.6 billion stake. Okay. Now, just out of nowhere yesterday, I mean, oil's down $3. But if you go back and look at Delta, you're going to see in the news there that they actually took, it's reported that they took a stake, 2.6 billion. Stock goes from 68 all the way to 74. Price today, just remember, if the price falls down in the morning and you don't even fall down to the midsection, which we didn't, I mean, today was pretty much the low almost. That's not much of a sell-off. That's even when oil was up $3 today. So today, what we actually see on oil is oil actually, oil's kind of pushing down a little bit. Delta actually getting a little bit of a nudge higher. Not massively, but still holding the bulk of the gains. Okay. Now, I want to come back to trade example number 2. Now, when you take a look at, let's say, the 3-year weekly chart of this, just to kind of show us what we're dealing with. Longer term, kind of more ascending triangle-ish. Now, I'll go back to the 1-year daily chart, zoom in on this. We talked about setting some alerts. We did that. But what else? Let's kind of imagine the investor says, look, I think we could be kind of, if we can get some of these prices to drop, could maybe some of these airlines find some footing. Let's imagine the investor says, I would like to buy the shares at this price or less. That's a buy limit order. Or we could actually say, I'll sell the put and try to be the buyer of the shares at the strike while trying to get a premium or some of it from now to the expiration date. Trade number 2. We're going to go back into this trade just for a second. And we bought those shares yesterday. The shares of Delta were purchased at 71.82, target 85.42, stop 67.14. Okay. Now, if we go back to, let's say, the kind of a lesser number of strikes, I'm going to take the same expiration. Okay. 18 June with 28 days left. Now, remember, if we sell those pets, we sell those puts, you're saying you're bullish. You think the price is going to go up. You're going to think that the time is going to go by, and you're going to think that the volatility could contract. Now, if you get all 3 of those, it could feel amazing. If it goes the opposite, it's not as amazing. And if we said, look, I'm going to sell the 72.5. Now, why did you look at that? Well, first thing that poked us in the eye is the amount of open interest on the 72.5. What's the other one here? You got the 70 with 7,600. So again, we're looking at where is that liquidity. Spread on that 70, 20 cents, 18 cents. The 72.5, you got about 30 cents. So if we took the middle, it's about 15. Now, if we said, look, we think we're more bullish, the investor might be okay with saying, look, I'll buy those shares at 72.5. Now, you got to remember, as you say that, what is the investor on the hook to do? Well, be the buyer of the shares from now until expiration at the 72.5, not just expiration. If we sell this put for 278, we collect the premium. We don't make it yet. We have to see what happens over time. Does the price go up and affect the option price? Does the time go by? Where does the volatility go? So when we sell the put for 277, whether we make or lose depends upon what happens with price, time, and volatility, which then is priced into what the option price is at that point in time. Now, notice if we sold one contract, note the commission, trade number 2. Okay? What I'm now going to do is trade number 2 is going to sell the put. Now, notice on this trade, we're not buying a put below. We're in the margin account where it's not tying up as much buying power. If we were in, let's say, the IRA, we could. Okay? I'm going to go say send that order. And on this trade, it's shares of stock plus a short put. James, do investors sometimes overlay maybe a strategy or two on the same ticker symbol? Sure. Do they have different sensitivities to trend movement? Sure. Obviously, if we did the short put, it's not just direction, it's time and volatility. Okay. Now, any questions? Any questions on that? Okay, so we did example given, number 1, was the Dow Jones. Okay. Example 2, Delta. Now, just for Bill's sake, because he's saying, hey, you're leaving out the great state of Illinois and United Airlines. Well, if we go to, let's say, United Airlines, let's go to this just real quick. Now, let's say I said to you, look, I want to get in, but I'm scared, okay? And I'm telling you, I mean, when I first started trading, I didn't have anyone to talk to. Well, actually, that's not true. My cousin's husband, he was a trader, okay? But I didn't talk to him a ton. Outside him, I didn't really know anyone that really was a trader at that point in time. Okay, this is 1998. So, but I didn't know about the strategy that I'm going to tell you about. I had no clue. It was just you went long or short. You bought the stock, you sold the stock short. That's all I knew. Let's imagine the investor says, look, I'm going to buy the shares of stock. Okay. Now, I'm going to say what I'm going to say, but I need to verify, is it a strategy that is applicable potentially? So if the investor said, look, I'm going to buy some shares of stock. Now, obviously, you buy the shares of stock, you're hoping it's going to go up. Okay, not a new idea. We don't have to buy 100 shares. We'll come back to that in just a moment. We buy those shares, let's say at 98.08, or if I'll let that free float and see where that price goes as we talk about this. Now, the first thing that we notice, if we said, look, I'm going to buy the shares of stock and maybe I want to buy a put below. Well, the one thing that we would kind of say that is a little doubtful, that is maybe a strategy that is consistent with what we talked about at the end of last year. If we're looking over here at what the implied volatility is, it's 60. If that implied volatility is probably greater than 35%, then buying the put for downside protection, buying the put, not selling, buying, that's probably not going to be realistic per the plan that we talked about. So when you look at the ROR, think of this as like the cost of the put relative to the current stock price. We said if we could maybe look to do a married put, which means we're buying the shares and buying the put at the same time. That strategy might be appropriate if the investor considered it. Second, if the implied volatility is between 15 and 25. Oh, we're not even close to that. So that actually says that strategy that I mentioned, it's going to force the trade to have to go up a lot to pay for the put. I heard someone say to me one time, well, I don't really, it doesn't matter to me what the puts cost. Kind of an odd comment, because if you say that, the cost of the put is going to influence the break even. And then the break even is going to influence what the probability of success is. So of course you would care what the put cost, because you're thinking about being profitable. Else, why would you be in the trade to begin with? Okay. Now, so in this, we're not going to buy the downside put. Notice sometimes you have thoughts, but when you go to try to execute it, it might not be available to really do it per your rule set. Now, if we come back to the chart for just a moment, where is the potential support? Where might you think the stock might stay above? Now, I'm going to take that lower moving average, which is the 20-period moving average. That 20-period moving average is sitting right here. Now, I want to go back to our little sheet of paper. What's the current stock price? 98.23. Support level at 93.39. Stop 91.52. Risk, we got 760. I speak German. We always go backwards. 6.8% on the risk percent. What is that telling us? It's a little high. It's not horrible, but it's a little higher. And it's because we kind of saw the price fall down to the moving average. Today's open price was pretty much the low. Someone said, "Thank you very much," and said, "Thank you for letting it drop down to where they think the support level could be." Okay. Now, in trading, some investors say, "Look, don't get mad, get even." Okay. So if you see that same pattern over and over and over, and you're thinking someone's literally doing that, well, I mean, you know about it too. The investor doesn't have to just sit there. They could actually practice what they're learning in the paperMoney account. Why not? Now, let's say the investor said, "Look, I'm going to set that stop at 91.52. Let's put that right there. So what I'm going to do is I'm going to change this order to an OCO bracket. Now, if I do this 91.52, I'm going to put that right there before I forget. Okay, 91.52. Current price 98.23, and it's moving around on us. That target price. Now, James, the last 2 days, we've kind of talked quite a bit about some of these oil trades. Yeah, you're right. Try to find some of these hot spots where you might be getting some movement here. Now, that upper resistance area, the middle of that, 103, the top end of that, if we did that, it's about 106. Now, again, the higher you set the target, the less probable it becomes. Data GTC, going to put that right there. Now, again, we got to go back to the position sizing. Okay. Now, if we're right, we wish we would have never known what position sizing was. When we're wrong, which we know we are sometimes, we're glad we know what position sizing is. Okay. So if we said in this account, 48,390, the most we could do on this is really 48.30, which is 10% of the capital. 10% of the capital is going to be on this. How many shares? Okay. Let's go back to this so it locks, and I think it changed. 48, sorry, clicked a number. 4,800 divided by 98.45. It's moved on us. It's going to be about 48 shares. So when I do this 48 shares, that's what we could actually really do. Just change those to negative 48. Negative 48. There you go. Okay. 48 shares. Let's do that calculator again. All I said is how much? 4,800. How much is the stock price? 40. Gosh, it's moved daggum 30 cents on us already. Okay. And there you go. Just remember how the stop. If it goes to that price or less, sell the shares. Trade number 3, kind of go double dipping in the airline space. James, isn't there kind of some correlation on this? You better believe it. You better believe it. Could you say there's some correlation to if airlines go up, could the Dow go up? Well, to some extent, I don't think it'd be hurt. I mean, if airlines go up, you might think, well, why are they going up? Could there be some correlation with the Dow? Could all these trades be correlated? Yeah, sure. Okay. Now I'm going to send that order, and there it is. Now, yeah. All right. Yeah, I love that. FOMO revenge. Okay. Yeah, James, don't you just want to get even? So, James, let's put James on the spot here. Okay. James, have you ever wanted to get even with the trend? I think you have, buddy. Okay. I think we all have, right? All right. All right. Now, by the way, James mentioned something very important. This coming Monday is Memorial Day. Okay. Yeah. And James makes another great comment. Please remember that someone paid for our freedoms. Freedom is not free. Yeah. I mean, look, I mean, we get to enjoy, if we, being someone who's not in the military currently or historically, we get to enjoy what they did. I mean, it's also important to show respect. There's nothing worse when someone doesn't show respect. So, absolutely, grateful for those men and women, and currently and in the future, but also historically, of people that live by principle and fought for something. We appreciate that. Okay, so thanks, James, for that comment. Yeah, no, I'm not going to go there, James. Get even, Boyd. No, James, body the body, Boyd, not get even. Now, let's actually go back to kind of some of the things we actually saw. When you look at, let's say, NVIDIA, let's go to just kind of see the reaction from the earnings. We can't really say the stock got knocked around a whole lot. I mean, it's kind of still here. I don't know what the expected move on this was, but man, you might say that those who were expecting the volatility to contract probably won the most. He or she that thought it was going to go up, it didn't go up, at least on the earnings. He or she that thought it was going to go up, it didn't go down. It just kind of contracted the volatility. Now, the reason why I bring up the NVIDIA, it didn't take a whole lot to see today that when you take a look at, let's say, the NASDAQ, stocks like ARM, golly, okay. So this is a weekly candle, okay, and just kind of notice that sometimes intra-week you get these sell-off down in the moving averages. That's all I got to say about that, okay? Again, someone right here could have said, yeah, I'm not going to buy it because we don't know for sure what's going to happen. Look, you could say that any day, okay? And if you look at, let's say, STX, Seabiscuit, well, Seabiscuit, or Seagate Technologies, poking its head above the 20-period moving average. WDC, and down the stretch it comes. Bullish engulfing. Now, again, people are going to say, and this is what they said last time when the market was down. Yeah, we're just going to have to wait and see. Well, as people say that, you got to understand that someone, if they take an entry on, like, say, WDC, they could set their stop right underneath today's open price, okay? You also need to think about what might cause a bearish investor to exit. Well, broken resistance. What causes a bullish investor exit? Broken support. Well, what's a level of resistance? Well, it could be the moving average. The higher we go to the upside, if people are short, well, they say buy it back, okay? Get out of that. And that's where we could get kind of like shorts covering and new bullish investors or current investors saying, I like to buy more, or those new investors saying, I'm trying to get in. I think the one stock we're probably going to have to keep an eye on, let's kind of go here for just a second. QCOM shot to the upside out of nowhere. For so many months, it did nothing. Okay, I mean, literally nothing. Now, how many besides me have ever actually held a stock and you just held it, and you held it, and you held, and it did nothing? And as soon as you sold it, I mean a day later, it just shoots to the upside. Yeah, you're just being naughty today. You're just literally rubbing salt in the wound. No, I said I did that too. Okay, it's happened to us all. Now, here's the deal. So let's kind of take a look at just real quick. So QCOM gets in the fight with the other ones in the group, okay? And now if you take a look at this, now everyone control yourselves. Everyone just control yourselves. Now, if we take a look at this, old resistance, okay? Now, here's the thing. It's fine to say, look, I missed that run. I admit it. And sometimes as trend traders, you miss the run, okay? Now, let's say, now we got to imagine something. We went from 120 in April 10th, and literally at the end of the month, not even a month later, well, actually, it was a month, the stock doubled in value. Okay, now, James, how do you, like, when you've had those moments where you just sat on the trend and didn't do anything, the investor sells it, and then a day or two later, whatever, it just shoots the upside. The more of the story is, this is why it's probably a better idea to just have a smaller list of stocks, okay? The thing you got to remember is, in the world of investing, as you invest over time, the flat out point is you're going to miss some. Michael Jordan missed some layups. Michael Jordan tried to dunk it, rimmed off the back and it bounced out, whatever, okay? The moral of the story is you're just trying to say, I'm not going to get them all. Mickey Mantle did not hit 1,000, okay? But we're trying to get chunks of that trend. Now, in this example, let's say the investor said, look, I want to get in, but I just want to kind of see, like, could the investor say, now, if we looked at the entry, right? This is entry setup number one, meaning that we only have the short-term moving average green. We don't have a cross. We don't have the 20-period moving average green. We know that it's early. Now, let's go back to the common denominator of what the investor's trying to do. That investor is trying to ride the stock when those moving averages are green. I know what the question is going to be. How do I know ahead of time which of those moving averages are, which stocks are going to give me those long trends? If you knew that, please tell us ahead of time. Now, this is kind of like in the world of surfing. You ride a wave that you think looks good, but you don't know how it's going to play out until it does. Okay? And that's the thing with investing. You just don't know how long that trend is going to last. And things could affect it, like the stock itself, like the market itself, like the sector itself, like the industry group itself. The investor is just taking the setup and saying, what is the risk? Now, buy custom with OCO bracket. If we did that, what the investor is fully understanding. Well, if the investor says, I'm going to get in and set the stop below 197.19, that is going to give us a number, and this is something you need to become very clear about, okay? You're in the business of taking risk. And with the risk, you need to actually have some capital that you could potentially lose. Now, with that potential you could capitally lose, you're saying, look, some of them are going to win, some of them are going to lose. And when you lose, the question is, how much did you lose? We don't look at that in terms of a dollar amount. We look at that as far as a percentage amount. When we look at this and we say 8%, it tells us we're a little elevated off that plateau of support. I used really near where the 10-period moving average was, okay? So now if the investor said, James, I don't like that percent, I might even do a half position. Fine, I'm not going to fight you on that, okay? And what I'm now going to do is I'm going to go to QCOM for just a sec, so we can put it in the paperMoney account, okay? QCOM, right-click on the ask price, buy custom with OCO bracket. Let's say the investor said, hey, James, I'm going to even do a half position, $2,400, we said 10% of the portfolio value. 10% would be 4,800. Chop in half, 2,400. If I did this and we put this back and said, what is that targeted area? Well, some traders, they might say, James, if it went up to that prior body, they might even say, look, I'll take that. Now, I'm just going to put it right there, okay? 237, okay? Now, again, a target is a target. It's a projection. You don't know if it's going to go there. But underneath, we already talked about that. What's that downside? It's 193.24. Now, that's the forecasted risk. 193.24, okay? Now, the goal of what we're talking about is we're trying to be in positions where the stock is above, at minimum, the 10-period moving average. Notice I don't show hardly any examples of buying stocks below their moving averages. Short-term moving averages, 10 to be specific, because that's the foundation. We're trying to be in stocks that actually have momentum. If we said more confirmation, price above the 20. Now, if you said what's the common denominator in losing? No, we wouldn't have to have much experience to tell you the answer to that. The common denominator of losing, simple, price below the 10, okay? That does not mean from day to day that's, that every day it's going to go up, every day it's going to go down. But if you looked at when you gave back money or down money or lost money, price was below the 10. When were you up on unrealized gains and or had realized gains because you took them? Simple, price above the 10. So the investors, once they understand that, and it sinks into your brain, the investor just says, I'm going to try to buy as many stocks per the paper money account as possible to learn. Okay? Do not be afraid of doing trade the paper money account. Some people say I trade real. Paper money is just, that's for people who don't know what they're doing. That's not true. You see people that drive NASCAR and they're practicing on their paper car during the week and racing real on the weekends. Okay? So it's not just, you're practicing strategy. You're practicing timing. And sometimes your real trades are already in, so you're using the paper money account to practice more and to test things. Now, when I do this, I'm going to go back to that 2,400 that we made mention of, 2,400. 24,000, too much. How many shares? 11. Okay. Target, stop. Okay. Now, I want to kind of go back to this just real quick. We're going to go confirm and send. Now, trade number one was Dow. Bullish long call on the DJX, an index option, an AM settlement. Okay. Second was actually Delta. Third was UAL. Fourth is actually QCOM. Okay. Now on the QCOM, the one thing I want to kind of remind us is the stop if it gets to that price at or below. That at or below price is 193.24. Send the order. And actually, I got to go back into that. That's what I want. 193. Got to put the numbers there. 193.24. It rejected because I was on that other. Okay, 24. And then we actually had what? 234-ish. Okay. Double check my number on that. There it is. Okay, I'm just checking that. 237. Okay. Now, when we look at that, that's what we want. We're in the paid money account. Okay. Stop right there. Now, when we send it, should go. There it is. I want to kind of go back to something just real quick. Okay. This, we talked about yesterday, Goldman Sachs. Goldman Sachs was entered 962.13. Okay. And we had a target really at 1035 or 1035. Today we get the price to go up near 1,000 and then it just sells off and goes down. Now, I mean, how much did the stock move? Okay. Well, the range of today was about $29 from low to high. I don't know. I mean, is that a lot? $29. Yesterday, the stock was at 962. Express it in terms of percent so you can kind of get an idea. It moved 3%. I mean, I don't know. I mean, it doesn't really seem like it stands out a lot, but you definitely see that someone might have had a target near 1,000. Okay. What did it do intraday? It fell right back down to the 30 yesterday's body, and then someone came in and stepped in and bought some more. Okay. So far, you got to understand something is when the stock goes up and makes a brand new high, if there were bearish investors, they could have been stopped out. Now let's think if we go up again, well, all of a sudden there might not be as many bearish investors, and those bulls might try to knock that price potentially even higher. The second stock we kind of made mention we're going to keep an eye on is Morgan Stanley. Two very similar trades. We talked about that. Keep an eye on that. I don't have any comments on that, but those were some that kind of definitely stood out. I think if we're talking also one in the Dow that we're going to keep an eye on, and again, there's some people that they like Samsung, they like Google Chrome, they're in different phones, they have flip phones. Who cares? Okay. The biggest thing is when you look at a company like Apple, that is the one we kind of made mention of a day or two ago that, man, if there was selling pressure, all you saw this week as we came down to the middle of near the range of last week, and someone said, "Spank you very much." We did not come down to the middle of last week's range, which is not a bad thing. Came down to the 10-period moving average, the 10-week moving average. Someone bought it off that level. This one, we did not even come down to the middle of it. Close, but no cigar. This one, we came down to the middle of it. What I'm saying is, when you don't even come down, if you come down to the middle of it, that's if there's going to be people that buy on the dip, that might be the area where they try to buy on the dip. Second, what if it doesn't? They might try to buy it off that moving average. And on Apple, we've been seeing that. Okay. Now, we know that if we go back and look at, let's say, the daily chart, this is what it looks like. Now, I'm going to kind of play the person that says it's too high, it's too high, it's too high. Well, you got to remember, if we go back to too high, what was the most recent area? The plateau. Okay. That plateau that we saw in the price was really right there. And I got to wrap it up here. But just remember, this has made a new support level right at 297. And now you just had a brand new high. Keep an eye on that. Okay. So sometimes you don't get these flags, deeper pullbacks, you get more consolidations. Now, stay tuned for Brett Crowther coming up next on short verticals. I want to say thanks for Connie for answering those questions in chat. Did 4 trade examples here today. So a very joyful discussion and lively. And thank you so much for that. It's always a pleasure. Join me back on ETFs tomorrow morning at 9:30 a.m. Eastern. Remember with what we talked about, we talked about examples, stocks and options. All investing has risk. And this has been the class on Trading the Trend. Brett Crowther coming up next with short verticals. Have a great day. See you back tomorrow. Take care. Bye-bye.